Hello, everyone. Welcome to Feedstuffs 365. I'm Sarah Muirhead. Joining us today to talk about what's happening in the beef sector is Trey Freeman of Ever.Ag. Welcome, Trey. It's a pleasure to have you back with us today.
Good to be here again, Sarah.
For those of you that are tuning in, we thank you for your time as well. And if you have any questions, feel free to post those in the chat area of your screen. And if you're joining us from social media, you can put those questions right there directly in your social channels. So Trey, it's been kind of a bit of volatility here in the overall economy, but that's kind of translated over into the beef sector. Fill us in. What is going on?
You bet. The sell-off started Thursday last week when the financial markets turned south, and then Friday there was a huge miss on the jobs numbers. So this evoked concern of slowing economy and recession fears. Unfortunately, cattle markets are closely tied to financial markets, so they were quick to turn over. Leading up to this over the last couple of months, though, there just wasn't much gusto in cattle futures. They had been trading at a discount to cash all summer. Fundamentally, box beef prices, they never pushed through last year's high in the spring, but the seasonal downturn we typically see in box beef prices late May or early June, it was small to what it often is. And in fact, over the last month, choice has been trading $10 to $12 above where it was a year ago. And likewise with select, currently $22 over where it was a year ago. And the cash market for fed cattle had slowly ground higher since early May, before softening up a couple of weeks ago, but only minorly. So when turmoil in the financial markets comes about, it's hard to think that it won't take a toll on cattle futures, given that there was already zero urgency for them to catch up to cash. But with that said, this is certainly an overdone move, in my opinion.
You mentioned the discrepancy between cash and futures. I mean, where are we going? What's going on?
You bet. Well, money flow can often trump fundamentals, and that's what we're experiencing. Open interest in live cattle has dropped 41,000 contracts in about a week's time. So, and over half of that occurred on one day, which was Friday last week. Now, on Committed Traders report, it showed managed money net long over 79,000 contracts, having added 12,600 to their net long position from last week's report. The numbers in these reports are delayed, and they're actually as of Tuesday each week. So what this is telling me is that managed money were likely a large driver of the big week up prior to last, when October finished over $5 higher on the week and December $4.50 higher. But what happened, managed money got spooked by the stock market and bailed just as quick as they got in. So when this happens, it can lead to a domino effect below that get hit, only to further exaggerate the move. And the same's for feeder cattle futures. They can overdo it either way, and to a greater degree than live cattle, since it's a much more thinly traded market.
What about cash and boxed beef market? What's your outlook there?
Yeah, boxed beef demand should begin to show improvements with Labor Day weekend just about a month out, led by strength in middle meats and strong demand for grinds. This should be supportive to the cash market, along with tightening supplies of fed cattle, with placements expected to run below year-ago levels from now into year-end. And I know this is repetitive, but it's consumer demand for beef that prices for fed cattle hinges on. However, consumers have hardly blinked at retail prices so far, with the latest all-fresh beef retail price at $7.99 a pound, which is a good 42 cents over a year ago.
So when you talk about fed beef production and slaughter, what do you see going on there? What's your thoughts for going forward?
Total beef production, it's down 1.57% through these first 29 weeks. This follows a 4.76% reduction for the same time frame in 2023 from 2022. Dressed weights really took off in March and have stayed at lofty levels ever since. Steers were last reported 26 pounds higher than last year at 921, and heifers 23 higher at 835. So cheap feed prices continue to provide incentive for longer days on feed. However, this will continue to offset a large portion of beef production. So that will be a headwind moving forward for fed cattle prices.
Of course, we always have to look at the exports, the imports. What about from a trade perspective? What's happening?
U.S. exports through the first half of the year are down 4.5%. A strong U.S. dollar and increasing competition on the global market from Australia and South America are a large part of this. To break a few of these destinations down, Mexico, exports to Mexico are up almost 15% for the first 6 months of this year. Over the last 5 years, Mexico has made up about 10.5% of our total beef exports. Exports to Japan, they were rather measly the first quarter of this year, but exceeded year-ago levels for all 3 months in Q2. They're down. They're only down 1.8% on the year now. Exports to Japan, they need to continue their strength into year-end. They carry a lot of weight, averaging 24% of our total exports over the last 5 years. South Korea, exports are down over 13% so far. They've averaged about 22% of our total annual exports over the last 5 years. Now, China, they're down over 11%, deteriorating economic conditions, and Australia taking more of their market share due to improved trade relationships, have them buying less U.S. beef. So overall, competition has heated up on the global market, notably from Australia and South America. For instance, Brazil, their world exports are up 27% for these first 6 months. Imports, beef imports into the U.S. are up nearly 19% on the year. We're 350 million pounds, totaling 2.2 billion so far. Imports from Australia are up 82%, and New Zealand up 15%. So that's well over 2 million more pounds the U.S. has imported between just those two countries of the 350 million so far. That's 200 million, sorry. Imports from Brazil are up 19%, and imports from Mexico down 66 million pounds. So about 19% lower than last year. So Mexico offsetting some of the larger overall imports. Looking at these together for the net beef trade, overall, for the first 6 months of the year, it's at a deficit of close to 700 million pounds. Last year, it was about 270 million pounds at this time. So bottom line is, for one, we need China's economy to up its performance for the remainder of the year to help prop our exports, and also need Japan to keep buying beef like they did this last quarter. But with the devaluating yen comes increasing cost to imports. So for now, it does appear unlikely they can hold that up.
You mentioned China, you mentioned Japan. What other factors are going to have the greatest impact for the cattle industry moving forward?
And really, performance of the financial markets, how they react to rate cuts. Will those rate cuts be bigger or smaller than expected? Or if we don't see any cuts by chance, jobs data, swings in the election polls, any surprises are likely going to lead to an overreaction either way. I mean, the rubber's going to meet the road here in the second half of the year. So everybody's on their toes more than they have been in a very long time, which that'll bleed into the cattle market like we've seen here recently, with herd retention widely believed to occur later this year, and that it's lining up with such impactful outcomes on the greater economy and the political and financial arena before year end. It's just about crunch time, and the changes in the structure of cattle futures over the last 2 months. I think this is very important. Deferred live cattle and feeder futures have lost their premium. So deferred live cattle had done nothing over the last 2 months up until this break, while nearbys had been firm to higher. This has led to what's called backwardation in the futures market, as August trades at a premium to October and an even larger premium to December, and same with the October contract at a premium over December and February. Looking back to the end of the bull market in late 2014, the market was in heavy backwardation. Futures did proceed to rally significantly, but those curves soon flattened out, eventually turning over into 2015. Now, many aspects differ in this cycle compared to last, but that slope's certainly worth monitoring. And at the very least, I believe it's suggesting the honeymoon phase is concluded in this bull cycle, meaning supply and demand fundamentals, they will burden much more weight to higher prices moving forward in the futures market. So to wrap up, just like we're facing in the financial arena, big time implications are soon to come with what lies ahead in the second half of the year. So again, in all, it's just about crunch time.
Lots to watch, lots to pay attention to. It sounds like when it comes to the cattle sector, and of course we know the economy overall. Trey Freeman of Ever.Ag, we thank you so much for joining us here today and sharing your insight on this important topic. You can catch Trey's weekly column in Beef Daily every week and on beefmagazine.com. So you want to check that out. Likewise, we appreciate all of you for tuning in. So a reminder, you can watch this interview and also catch any other Feedstuffs 365 exclusive interviews on feedstuffs.com. Until next time, for Feedstuffs, I'm Sarah Muirhead.